On August 29, in a significant legal decision, the U.S. District of Columbia Court of Appeals ruled against the Securities and Exchange Commission, SEC, for rejecting an application from Grayscale Investments, a crypto asset manager. Grayscale had sought approval to list an exchange-traded fund, ETF, that would track the price of Bitcoin. The outcome of this case has been closely monitored by the cryptocurrency and asset management industries, both eager to obtain SEC approval for a Bitcoin ETF. Such an ETF would enable investors to gain exposure to Bitcoin without directly owning it. The SEC, however, has expressed concerns that ETFs based on spot Bitcoin prices could be susceptible to market manipulation. What happened with Grayscale? In the previous year, the SEC denied Grayscale's application to convert its Grayscale Bitcoin Trust, GBTC, into an ETF, tradable on the New York Stock Exchange's ARCA market. Although the SEC had rejected spot Bitcoin ETFs, it had approved Bitcoin futures ETFs, which track agreements to buy or sell Bitcoin at a predetermined price. Grayscale and ARCA had proposed implementing the same safeguards against market manipulation that were accepted for Bitcoin futures ETFs, but the SEC found these measures inadequate. Grayscale was distinctive among asset managers whose spot Bitcoin ETF applications were rejected by the SEC because they chose to take legal action against the SEC. Due to the regulatory nature of the defendant, the case bypassed lower courts and went straight to the appeals court. Grayscale's argument. Grayscale's argument centered on the notion that the surveillance arrangements for Bitcoin futures ETFs should also be applicable to their proposed spot ETF, as both products are linked to the underlying price of Bitcoin. Bitcoin futures ETFs are based on Bitcoin futures trading at the Chicago Mercantile Exchange, CME, a leading venue for such products. The CME monitors market conditions and price movements in real time to identify and prevent price distortions, including those caused by manipulation. Grayscale argued that a spot Bitcoin ETF would better protect investors by providing the oversight of the CME, while most Americans currently invest in Bitcoin through less established or unregulated exchanges. However, the SEC contended that Grayscale lacked sufficient data to demonstrate that the CME's surveillance agreement could effectively detect potential manipulation in the spot Bitcoin markets. Court's ruling. The panel of judges in the court found that Grayscale's proposed Bitcoin ETF was materially similar to approved Bitcoin futures ETFs because the underlying assets, Bitcoin and Bitcoin futures, are closely correlated, and the surveillance sharing agreements with the CME are identical. Therefore, the court determined that the SEC acted arbitrary and capricious in rejecting the application because it failed to explain why Grayscale owning Bitcoin instead of Bitcoin futures would affect the CME's ability to detect fraud. What happens next? Both Grayscale and the SEC have 45 days to appeal the ruling. If an appeal is made, the case could go to the U.S. Supreme Court or undergo an en banc panel review. It remains uncertain whether the SEC will appeal the decision. Should Grayscale ultimately prevail, and the SEC does not appeal, the court will outline how its decision should be implemented. This could involve instructing the SEC to approve the application or revisit Grayscale's application, where the SEC could still reject it on other grounds. Implications for other applications. Several firms have submitted spot Bitcoin ETF applications for listing on exchanges such as Nasdaq and CBOE Global Markets, including major players like BlackRock and Fidelity. Many have proposed collaborating with Coinbase, a leading US-based crypto exchange, to monitor trading in the underlying Bitcoin market. The SEC has formally acknowledged these applications, and it can take up to 240 days to make a decision. Tuesday's ruling does not guarantee that the SEC must approve a Bitcoin ETF, but it could influence the SEC's decisions on these proposals. The cryptocurrency and investment industries will continue to closely follow developments in this space.